Alright guys, Jason Graystone here from Trading Powered. This week's video, I wanted to run through the three different main types of trader. We get lots and lots of questions on what are the differences between a trend continuation trader, a trend following trader, or a counter trend trader. So I want to take you through some examples on the charts and give you an insight into the differences between those types of traders and how they might approach the markets. So sit back, grab a pen and paper, and I'll see you in a minute. Alright, so we're going to go over the Aussie dollar as an example here, okay? This is an example. I'm going to go over all different cases, whether you're a trend continuation trader, trend following trader, or a counter trend trader, and give you examples of the differences between those, okay? So we're looking at the Aussie dollar, and for instance, we've seen this recent price action. We've seen market push up, push up, push up, before putting in our double top here. We actually violated the double top, came up for this kiss of death style trading opportunity here after violating this retracement. Okay, so we had our double top, we had our 2618 trade or kiss of death trade, if you're familiar with that, and then we started to roll over. We violated structure, putting in lower lows and lower highs, okay? And as we put in these lower low, lower highs, we start to look for, as trend continuation traders, we're starting to look for a retest of the lows. So every time we put in a new structure low, we're looking for a pullback, and we're looking to sell that pullback for a retest of the lows. And as a trend continuation trader, we're initially looking to take profits off at a retest of the low, whether that's your entire position size or you split your position into different profit targets, and you're taking some profit off at this level, and then you're looking to shoot for a lower level to take off the rest of your position or more of your position, or maybe you even keep adding to your position size as you continue to put in lower lows. But the fact is, we're taking off profit at a retest of the lows. Okay, so what a trend continuation trader would be looking for is we'd be looking for a new low. Okay, so as soon as we put in a new structure low here, we're looking for a pullback, and that's where we start to build out that kill zone. Okay, we're looking for, you know, a pullback into a kill zone. We're building out our 1-to-1 risk reward, or depending on your risk reward rules, I would need a minimum of a 1-to-1. Okay, so I'd be looking at putting my ATR based stop loss above the outside return, the previous outside return. Okay, so if the high is 50, say, I'll be up at 65. And I'll be looking for that minimum 1-to-1. I'll only be shooting for a retest of these lows. Okay, so I know that my target is going to go here. My stop loss is got to go above at 66.65 or 66.64. Okay, I'll draw this in red. Okay, let's just adjust that up. So this now becomes my kill zone. So I now say, right, well, I need price action to pull right back up into this kill zone in order to get my entry rule, look for my entry rules into the trade. Okay, but the point I'm making is we're only ever shooting for a retest of lows before we start taking targets. Okay, now if you're a trend following trader, you're going to be looking for an extended move. Okay, now whether that's based off of structure or you build out some confluence with some fibs. So for instance, you may say to yourself, well, I'm going to look to, if we get a pullback, I'm going to be looking to shoot for an extension of this previous move, this most recent move for the 127 extension. Okay, for example, and you might bring on that 127 extension, eyeball it with previous structure and say, do you know what, every time this 127 level is tested down here at 75.75, this is respected over and over and over again. This is a level that I'd like to take my initial targets at, because I don't want to expect to move beyond that point before I start to take profits. Okay, but what that means is you're going to be having a better risk reward than a trend continuation trader, because your initial targets, before you even start taking any profits, you're looking at a move down to 75.74. So if your stops are up here above 76.64, you've got a great risk reward. You can see that's a one, almost a 1 3/4 to 1 risk reward. Okay, so that's a trend following trader. Now a counter trend trader is someone who's going against the trend. So how would you go about going against the trend? Well, you're essentially looking in a bearish market, you're looking to buy the retracement. Okay, or you're looking for some kind of relief here or a rally here or some kind of reversal here, okay, for a counter trend move. And the way a counter trend trader, if you're familiar with a CTS approach, obviously the CTS system was designed for a counter trend approach, counter trend style of analysis. But what you're essentially looking for is to buy the pullback. Now, you would be doing this similar analysis, you'd be building out the most likely place for a reversal. Now, the way you do that may be based off of lots of different filters. Okay, so for instance, you may use a fib extension. Okay, from the most recent move to the most recent low, you can see we're at that previous, we're at that ABCD completion point, that harmonic move. Okay, you may also bring on some Fibonacci tools and use your fib extension. You see we've got a 1618 down there as well. And the CTS system really allows you to build out a score to allow you to enter a trade. So it does away with any opinions or emotions, and it's all definitive rules of engagement. You're building up a point scoring system, and your scoring system is telling you when you can get involved in the trade rather than your opinions. And it's a way to keep it consistent. Okay, so you've got a 1618 extension down there, you've got an ABCD pattern down there. You may look for RSI to go oversold. Okay, you may also pay attention to structure. So if we draw this line in here at 75.90s, is this a level that's respected on this market? Well, let's put our horizontal line tool in at 75.90. Let's take a look out on the higher time frame. Okay, because if we go out to the higher time frame, we're likely to see the major levels of structure. Now you can see if we look left here, you can see that we was respected here, right? Respected here, 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 respected, respected. Let's go back even further and look at this. Support, 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 right? Support, support, resistance, and it goes on and on. Do you consider this a major level of structure? Well, my answer would be yes, this is a major level of structure. So if you was a counter trend trader, this would certainly be a level. If this level's tested, every time it's tested in the past, or more often than not is respected, and we see a reaction, then there's a high probability that if we test this level again, we're likely to see a reaction off of this level. Okay, so dropping back down to the trading time frame, this is where a counter trend trader might say, right, okay, the aggressive counter trend trader will just enter at this level. Okay, and if you're a bit more conservative, this is where you'd be looking for that double bottom. Okay, you'd be looking for a retest of structure, a retest of these lows, and then you'd be looking for a valid double bottom, and then you'd look to buy this up. So the difference between the three, just to recap, is a trend continuation trader is taking profits off at a retest of the last move, okay, the last low before the pullback. A trend following trader is looking for an extension of the last move, okay, and a counter trend trader is looking for a move against the direction of the trend. Okay, but what's really important here is the analysis of profit taking. Most people think that you need to be so focused and tuned into analyzing areas of the market that you can get involved and place a trade and get into the trade, but they don't put that same effort and analysis into profit taking. Now, if you don't put as much analysis and effort in your analysis to profit taking as you do to actually getting in the trade itself, well then what's the point? You know, it needs to be a complete package. There's no point identifying areas to get in the trade if you can't identify the best areas to take profits. All right, so that's why it's important to test all this stuff. These are ideas. These are ideas that you can take and back test. Okay, and hopefully that clears up all of the questions between the difference between trend continuation, trend following, and counter trend traders. And all right, we'll keep an eye out on these this market. We'll see if any of this stuff plays out. Obviously, we don't know what the markets are going to do. We can just position ourselves in the best possible scenario based on our historical testing and the probabilities of what's likely to happen next. Okay, so hope you enjoyed the video, guys, and I'll see you soon. All right, guys, so that was it. Hope you enjoyed that. Hope you got value from that. Those are the three main types of trader. Obviously, there's many more, but those are the three main ones that we get the questions on. And if you're wondering what the CTS is, that's the Combined Technical Scoring System. We teach that as part of the Ultimate Trader Transformation course. And really, it's a way to develop consistency in a subjective market. So when you think of patterns and you think of a bat pattern, for instance, or a Gartley formation, very definitive rules of engagement, very easy to follow. You're following one ratio to the next ratio, and it's very definitive rules of engagement. Now, if you're a trend continuation trader or a structure-based trader, structure is subjective. Everyone's got a different idea of structure. So the CTS system allows you to be very consistent and build out definitive rules into a subjective market. Jason Stapleton used this method to rank very highly in a world trading competition, which you can go and check out an interview with him where he talks about that. I think he came 4th place out of something like 10,000 people, so pretty decent. And again, if you're interested in that CTS style of trading, go over to the website, the link's below, where you can get hold of the Ultimate Trader Transformation course and many of the other products and indicators and coaching programs that we offer at Trade Empowered. So till next time, guys, take care. Don't forget to subscribe to this channel if you haven't already, and I'll see you then.